This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on January the 10th, 2019. Our time is 8:11 Mountain. Let's get into the numbers. US dollar is down a bit from last week, 95.34. Canadian dollar at 75.49, up a bit because the Bank of Canada did not raise interest rates. The euro at 1.15. The pound at 127, gold at 12.93, silver 15.70. Gold-silver ratio is around 82.83. The big news of the week, platinum is at 825, palladium 1309. We will talk to Harold about this in a bit, but there you have it. Palladium is above gold. WTI is at 51.75, Brent 60.98, Nat gas 305. Bitcoin US yesterday was above $4,000. Today it's 3,773.87. Bitcoin in Canadian 4,996.64. The Dow 23,754. The S&P is at 25.84, NASDAQ 68.97, TSX 14,804. It was a busy week for Donald Trump. He gave a speech to the nation, and then there was a rebuttal from the Democrats. You can tell they are definitely in a war. Yesterday's meeting between President Donald Trump and congressional Democrat leaders produced no progress towards resolving the government shutdown as talks collapsed soon after they began. Trump walked out of the room because the Democrats said, no, we're not building a wall. He's traveling to the Mexican border today to rally support for his stance on the wall. Barring a last-minute change of heart by either side, 800,000 federal workers will miss their paychecks tomorrow. Republicans in Congress may start to lose patience with the president's position as they hold their own meetings in an attempt to find a solution to the impasse. In our free weekly newsletter, we have lots of information on this government shutdown, and it is going to be very painful for those that are involved. In fact, there was a story that we found from CNBC that said 78% of people live paycheck to paycheck. Take that into account. You think about the government workers. There are people that are going to be homeless. So, Harold, it is one heck of a situation. And I understand that Donald Trump wants the wall, but 800,000 people being in financial limbo, that is not a good situation for the United States by any means.
Oh, you're 100% right, Randy. It's horrible. 800,000 people that are affected by this decision, and he doesn't seem to care. I mean, if you saw his speech the other night, everything was, you could tell he was reading every single word. He's not a great communicator in that sense. But this is really starting to turn into a frightening situation for the U.S. because, again, with the government, basically shut down, you've got no IRS, you've got all the state parks are closed. There's so many areas that are being affected. But again, obviously, our hearts go out to the people that are not going to get paid. In fact, some of them still have to work and not get paid. Obviously, the airport security and everything like that is paramount at this point. But, I mean, how long could these people go without getting paid? It's got to affect the economy. It's got to affect the overall feelings towards the United States. That's why you've got such choppy markets at this point. Number one, you've got the stock market up one day, down the next, and no real direction. But the direction should be down at this particular point because this is a very dangerous situation. So you've got the government shutdown. Trump is not budging. The Democrats are not budging. This could go on for a long, long time and affect an awful lot of people. Now, the stock market should be falling substantially. It's down today, but is up about 100 points yesterday. So you're not getting those massive moves anymore. There's a lot of fear in the marketplace at this time. So it's very, very possible that the stock market could fall if this continues to be an issue. We're going to have to watch that very closely. The U.S. dollar should also fall as a result of this because we're definitely going to lose stature in the world, and that's going to cause gold to run. Now, it's going to take an awful lot for gold it hasn't been able to break 1,300 yet. And 1,300 is not the major resistance level. The major number for gold, as we all know, is $1,380. So we're not even close to that. We're basically $90 away. But don't forget the last time we got to 1370, 1375, the market backed off from that point. So that's how important that 1380 number is to the gold market. The only way I see gold breaking over that 1380 level over the short term is, number one, the dollar takes a big hit and the U.S. economy takes a big hit. And the fact is that we know that there's a plunge protection team. We know that there's a team in there that monitors stocks, and their function is to stop the market from falling, precipitously. But that is possible because, again, we've got a government shutdown here, and you've got a lot of negative situations happening, and a government that is just not together. You've got a bully and a president that is not going to back off of this. There's just no doubt he would lose all credibility to his supporters if he backed off. So he waited for his time. His time is now, and he's playing hardball, and the chances are he's going to get his way. The stock market will react once the government opens up again. And if Trump does get the wall, even though it's, they're talking about $6 billion and the U.S. doesn't have that kind of money to throw away at this time, the fact is, my guess is that they are going to come to an agreement fairly soon because, again, this is hurting both parties, Republicans and Democrats. And again, in the next election, it's not going to be pretty. So I think that the markets right now are caught in a narrow range, but there is potential for a breakout on the upside if they were to settle this and the government workers went back to work. That would be a big coup for the stock market. However, if it doesn't get settled and the U.S. dollar continues to fall, watch out for a bit of a breakout in gold. As I said before, it's going to take a lot for gold to break above 1380. I don't see anything in the market at this point that's going to do that unless something really breaks down with the government. So again, we'd have to see it break 1380, close twice above that, in order for gold to be on the route to a bull market again that could take us not only well over 2,000 over the longer term, but substantially higher. That's going to happen if the U.S. dollar breaks down. And again, this is prolongated as far as the shutdown of the U.S. government, Randy. So it's very concerning. The markets don't know what to do at this point, so they're up one day and down the next. But we need something dramatic in order to see a breakout up or down in both the gold markets and in the stock markets.
Let's talk about palladium right now. So palladium is at 1309, platinum 825. Bloomberg had a story. It is in our free weekly newsletter. You can get the newsletter, the companion to the podcast, from Harold. Connect with him at rarecoloreddiamonds.com. Now, they say palladium just smashed another record. Palladium's premium to platinum jumped to a record, building on its ranking as the best performing metal of 2018. Shortages of the metal used in auto catalysts for gas fuel vehicles sent its price to yet another all-time high, widening the price difference with rival platinum to more than $500 an ounce on Tuesday. Most analysts don't see supply relief for palladium anytime soon. Now, why is this happening? They explain it. Both metals are used in catalytic converters to reduce vehicle emissions. Platinum, the more expensive of the two for most of this century, has seen usage decline from its key customers, diesel car makers. Demand slid as customers turned away from diesel vehicles in the wake of the Volkswagen emissions cheating scandal. Platinum is now trading near a 10-year low at about, as we are today, mentioning it, 825, while palladium is 1309. The widening price gap has spurred speculation that petrol car makers may switch from palladium to cheaper platinum. But Anton Berlin, head of analysts and marketing development at Russia's Norilsk Nickel, PJSC, says this is unlikely. Platinum has some features that make it more suitable for gasoline or hybrid cars, like better resistance to higher temperatures. Switching to platinum would take at least 2 years and would need additional work and costs to adjust engines and car exhaust systems, said Berlin, whose company company is the world's biggest palladium miner and fourth in platinum. Manufacturers also need to use more of the precious metal than is needed with palladium. That sort of explains it. It seems that for people to switch from palladium to platinum, it would take quite a bit of time. And then on top of it, it seems palladium is better than platinum when used in vehicles that run on gas or hybrids.
Well, again, palladium has just done an unbelievable job. I remember back many years ago when we first recommended palladium, it was at $170. So obviously the long-term move in palladium has been substantial. Now, one of the reasons that palladium is capable of getting to these extremely high levels is because it's controlled by Russia. So Russia can do whatever they want because they're the major producer of palladium. And if there's shortages in the market at this time, it's primarily because that's what Russia is orchestrating. So it would be surprising if platinum did not start to come back. However, the fact that it would take 2 years to gear up to use platinum and you need more platinum than palladium, maybe the prices actually work out. I just don't know how much higher palladium could actually go. I remember when it went to $1,200, it almost put Ford out of business because they had a contract for palladium and they just bought it at the highest price, and it almost put Ford out of business back in the day. So again, the price of palladium is really controlled by Russia, and it's not a massively mined metal. There's shortages of it, and that's why the price is so high. But again, if it gets much higher, I would think that you are going to start to see some of the car manufacturers start to gear up for the long-term use of platinum again.
I can't remember in the last 20 years where palladium has been higher than gold. Do you?
No, never. It's never, ever been that way. Never. This is the only time this has ever happened, and it's the only time that palladium has been higher than platinum. So, again, when we recommended palladium, it was at $170. And it made a substantial move. We really caught that move all the way up to close to around 1,000. So the clients that bought into that market did tremendously well. We didn't play futures or anything leverage. We just bought it physically. And again, it turned out to be a massive winner. But did I expect it to get to 1,300? No, I did not. I thought it would have fallen off as platinum, was at a much better price. So that still could happen, but there are obviously factors in the market that are making palladium make this move, and I think a lot of it is to do with Russia, keeping short supplies of the metal.
And we did in the past offer Palladium Coins. Didn't we have that one coin, Harold? It had the little Tiffany window. Wasn't that a Palladium coin, or was that platinum?
No, that was platinum.
Okay.
But that coin was unbelievable. Absolutely one of the most magnificent collectible coins I've ever seen. Palladium was very, very rare back then. You could buy some palladium coins, and we did offer those. They sold out immediately, and we've never revisited it, but congratulations to the clients that own those. They're right now, most of the clients bought it when it was around 170 to 200. They've made 500% return on their money at this point or more.
That's outstanding. Congratulations. No change. Bank of Canada kept the interest rate at 1.75, which is not a huge surprise. Now, they did come out and say BlackRock, which is an investment company in Canada and the United States, that they believe that the Bank of Canada will not raise interest rates over the next 12 months, which seems to be very reasonable based on what's happening. Also, there were minutes that were released yesterday that came out from the last meeting of the Federal Reserve, and they were actually much more dovish than they originally indicated in their first statement after the meeting. Many participants expressed the view that, especially in an environment of muted inflation pressures, committee could afford to be patient about further policy firming. The bet is at this point on Wall Street that they will not raise rates, and there had been talk last year at the end of the year that they would raise rates 4 times to get up to what they called normal rates in 2019. So Wall Street is saying now that they don't think a rate rise will happen in 2019. The next one possibly will happen in 2020. And one of the things that they would like to add to their language is that rate increases will be data data dependent. The problem is, Harold, you have no data because the government is shut down, gives out employment numbers and so many other statistics, whether it be Canada or the United States. And with the government shutdown, none of those statistics are going to be given out. So that's another side effect, Harold, of what's happening with the government shutdown in the United States.
You bet. There's a lot of things that are smaller things that mean a lot to companies, that are going to hinder them moving forward type of things. So again, the government shutdown is an embarrassment. It's detrimental to the country, and it's hurting the citizens of the United States in a tremendous way. 800,000 people not getting paid tomorrow is not a good thing. I just don't know how in the world they're going to get around this. And, Trump, how popular is he possibly going to be after this thing? I mean, if this goes on and on and on, and he continues to hold people out of work because he's pouting because he doesn't get his way, that's going to be an issue. So very difficult decision on their part, but it's certainly not going well in the U.S. at this point. And if it continues much further, there's going to be repercussions, there's no doubt.
People always think that the Democrats are the big spenders down in the United States. The truth is they both are. Both parties are big spenders, and we'll worry about it later. Leave it for the next guy. We'll just keep people happy for the moment. And this is a story that came out during the week that proves that point. The recently deposed Republican majority in the House increased the federal debt in the United States $7.9 trillion in 8 years. So it just goes to show that, yes, the Republicans, they're drunk sailors just the way the Democrats are. Nobody is safe when it comes to government spending. One of the other stories that caught my eye this week, Harold, was Sears. It looked like Sears may be going into liquidation. They were very close to that. Eddie Lampert, who's a hedge fund manager, owned Sears, and it looked like it was going into liquidation. And then at the last minute, the judge gave Eddie Lampert an opportunity to save Sears. We'll see if that is possible here as the week progresses. We don't know as we speak to you right now, but Sears on the brink of being liquidated, Harold. And one thing that was brought up, and it's very true, in its day, Sears was the Amazon of its time. So I understand why Jeff Bezos, and we'll talk about him a little later, he's getting divorced. I can understand why Jeff Bezos is so paranoid about Amazon going out of business because he talks about it all the time. He said, it's going to happen one day. We just have to make sure it doesn't happen during our time. Well, here we go. Sears is on the brink after being the Amazon of its time, and really stunning to see, Harold.
It is. And why make a comment like that? Like eventually your company's the biggest company basically in the world at this point, or one of them. Your stock has just dropped by 30% and you come out and make a statement like that? That's not too sharp. Sears is done. There's no way in the world they're going to save that company. I just don't see it. The retail business is a totally different business than it was 10 years ago. And these companies just can't continue to pay the rent with the little amount of business that comes in through the doors. They might as well just keep their online business going and close the brick and mortar because it's just not working. And it's not just Sears. As we know, it's many retailers that are having the same issues. So I just don't see that happening. And I'm just shocked that Amazon, would come out and make a statement like that. That's certainly, doesn't bode well with people that are looking to buy your stock and are worried, because you're down 30% in the last few months. So again, I just don't understand that comment.
Well, we could mention it now. The news came out, Jeff Bezos, the world's richest man, and his wife Mackenzie are getting divorced after 25 years. It seems that Jeff has found another woman. Might add, she's very, very beautiful. Now, Jeff is he's 54, worth $137 billion. His wife, Mackenzie, is a writer and drove with him from the eastern seaboard of the United States to Seattle to set up Amazon, was totally involved from the beginning. There was no prenup. Well, why would you have one? Because you get married at a young age, you have nothing. And then lightning strikes and you're worth $137 billion thanks to a great idea like Amazon. But the divorce lawyers hopefully are not going to make too much money. Let's hope it's amicably settled. But she's going to become a very wealthy woman, Harold, Mackenzie Bezos. With a husband worth $137 billion, you can pretty much guarantee that she will take half of that money without a doubt.
You better believe it. And how is that going to affect the company moving forward? So, yeah, when you start out, you're bright-eyed and bushy-tailed, and it's you two against the world, and you're going to make your mark. And in this case, they built a phenomenal business together, so she deserves everything that she's going to get. If she's entitled to half, which I believe she is, she deserves half of it. So I hope it doesn't affect the company, and that she's intelligent, and they both are enough to not hurt the company. But it is going to be a massive, massive settlement.
Jeff Bezos, his parents, had put in $250,000 and are worth $30 billion today. Thank you, Jeffrey, for helping your parents. Canadian dollar, it had a rough ride in 2018. Canadian dollar fell nearly 8% against its U.S. counterpart. They're actually saying the dollar still stands out as being one of the overvalued currencies in the G10 space. Canada's external balance remains negative and would require further exchange depreciation to bring it back to a more sustainable level, meaning the Canadian dollar will need to go down versus other currencies, in particular the US dollar. And if here in Canada we don't raise rates, I would imagine that's going to happen. So, Harold, as of last week, we had the Canadian dollar at 73.92. This week it's at 75.49. It popped up a bit after the Bank of Canada made its decision and sort of kept things open that they might raise rates, but let's be honest, they're not going to. So I would suspect that we could see the Canadian dollar down around 73, 74, who knows, maybe even 72 at some point, because it does seem to be overvalued.
Well, we're going to have to see, because if the U.S. dollar falls, then it'll all sort of fall into line a bit. I just don't see the U.S. dollar gaining a lot of strength, especially with the with what we're facing at this particular point with, the government shutdown, especially with, a $20 trillion debt and the country divided like it is. These are very, very difficult times. And again, if it wasn't for this plunge protection team, which I think is so illegal, to be honest with you, these markets are supposed to be free markets, meaning that you're allowed to make your own decision and place your own bets. There's no doubt that the commodity markets and the stock markets are gambling casinos. You've got buyers, you've got sellers, you've got hedgers, you've got speculators. So basically, you've got people in the marketplace that are, using the markets for two different scenarios. And the fact is that the more volatile that these markets get, that's not a good thing. People don't want to have their money in a volatile market, especially their retirement funds. So again, at this particular point, these markets are extremely volatile, looking for direction. And again, there's scenarios within the marketplace at this point that could move the market substantially higher or substantially lower. So we're almost at a crossroads at this particular time. Going to have to see what happens realistically with the government shutdown. That's one of the most important things at this point. Obviously, by not raising interest rates, the Canadian dollar is not going to strengthen based on that. The only chance that the Canadian dollar has to strengthen at this time is if the U.S. dollar falls. And why would the U.S. dollar fall? Well, pretty obvious reasons. Number one, if they're not going to raise interest rates as much as they said that they were going to, then the dollar could fall off of that, because a rise in interest rates strengthens the dollar, not weakens it. And again, if we do have a heavy pullback in the stock market, or if we have issues with the government staying shut for several months longer, we could see a heavy downward move in some of these markets. So we'll have to see what happens over the next 60 days.
There's three big things. As Harold touched on, there's the government shutdown, and that obviously is very serious. Trump has said it could go on for years. And knowing him, Lord knows it might. And then you add in they're negotiating a trade deal with China, and that has not gone well. They've got a little bit of good news once in a while, and then it pretty much dissipates. The third thing, and this is what I was reading about during the week, the debt ceiling needs to be raised in the United States so they can further borrow more money. They're approaching $22 trillion in their debt. Deficits are about $1.5 trillion a year. They need to raise that debt ceiling, and that is supposedly going to be one heck of a battle. Three major things to keep an eye on. RareColoredDiamonds.com is Harold's website. We have an outstanding story here in 2019 about diamonds. Colored Diamonds Expected to Shine in 2019 is the title. Get the free weekly newsletter, the companion to the podcast from Harold. Connect with him at RareColoredDiamonds.com. Within this story, for those that own colored diamonds, you'll be very happy to hear this news. Tracked by Knight Frank as one of the 10 luxury investment assets, along with jewelry in general, art, wine, watches, and cars, the value of colored diamonds has appreciated 70% in the last decade, about 12% every year, according to the 2018 Knight Frank Luxury Investment Index. So that is great news for those that own or thinking about owning rare colored diamonds. Now, Ella Rosa is a Russian diamond company, and they had a few auctions in 2018 of their colored diamonds that went very well, and they say we expect fancy diamonds to become even more popular investments in the near future. Harold, this is one thing about the environment that we're in. We talked about it on the last podcast. We had that story from the Wall Street Journal about colored diamonds and art and cars being the winners in 2018 compared to the stock market and bond and real estate markets. But it looks like your idea back in 2005 to start Rare Colored Diamonds and have people invest in diamonds has been obviously a solid investment. When we hear news that it's appreciating at about 12% a year over the last decade, and obviously there are some diamonds that would be appreciating more, maybe the Argyle pink diamonds based on how rare they are, but this investment has turned out to be a real winner.
Yeah, very, very pleased with that. Again, it's a longer term investment, but just look at what's happening, for example, in the stock market. If you invested in stocks, you lost this year. That doesn't happen in rare colored diamonds. They don't trade on exchanges. There's not a huge supply of them. In fact, it's the opposite. The supplies of colored diamonds are minuscule. So you're talking about an asset that is a hard asset that you can hold in your hand. It's got intrinsic value. It's got the potential over the long term to make very solid moves on the upside. And it gives you other opportunities. I read an article just the other day on the tremendous amount of people, Americans, that are leaving the U.S. because of present situations. Now, again, it's very difficult when you leave the country to take your stock portfolio, your cash, your gold, your assets, those type of things, because you can't cross the border with them that easily. We're not in any way, shape, or form saying, to smuggle things across the border. We're not saying that at all. What I'm saying is that diamonds are portable private wealth. You could cross a border with the right documents, with a $10 million diamond in your pocket. So it's very easy to transport. They're very valuable. They don't lose their value. And over a longer period of time, they can gain tremendous value. Keeping a diamond in the family over a period of decades has proven that these diamonds have gone up exponentially. Their moves have been tremendous. We brought stories to you like Shirley Temple's diamond that was bought for $7,100 that was sold for $25 million over a long period of time. But still, those returns are not available in any other type of asset except a hard asset like art, diamonds, rare cars, those type of things. So I remember being a kid growing up in Toronto where you could buy a Firebird or a Trans Am or a Corvette or whatever for, under $10,000 or $5,000 back then. And some of those cars today are in the hundreds of thousands to millions of dollars. So again, that's the potential of owning colored diamonds or hard assets like that. They're different than trading stocks because they don't trade on exchanges. You don't have buyers and sellers on a daily basis. You buy it, you put away, you enjoy the beauty of it, maybe put it into a magnificent setting and wear it and enjoy it. But when the time comes, that diamond could be sold for a lot more than what you paid for it.
Learn more about rare colored diamonds at Harold's website, rarecoloreddiamonds.com, and ask about the Argyle pink diamonds. We know the mine is shutting down in 2020. They think they may have 2 to 3 more tenders. These pink diamonds are ultra rare and will be worth a lot of money, we believe, in the future. They have appreciated greatly over the last 15, 20 years, and that will even become a more coveted asset when the mine shuts down. We're at the end of the podcast. We want to run through just a couple of quick hits. Canada's pot shortage could last up to 3 years, according to experts. Lack of pot, and I guess as a result, it could take 3 years to hit equilibrium. A home on Billionaires Beach in Malibu, California, sold for $110 million in April of 2018 in Los Angeles County. That is one of the highest prices ever paid. And the co-founder of the Hard Rock Cafe sold the beachfront property to a natural gas billionaire. It's called Billionaires Beach, the home to several notable residents, including Oracle co-founder Larry Ellison. In the United States, the top 20% of households pay 88% of federal income taxes. As we mentioned, Jeff Bezos is getting divorced from his wife, Mackenzie. There was a 278-kilogram bluefin tuna that sold for a world record price of $3 million at Tokyo's famous fish market. It was purchased by a restaurant chain in Japan, and they said that the quality of tuna is the best. Although the person who bought it, the owner of the chain, said he admitted he was surprised by the price. He thinks that he might have spent a little bit too much. And then finally, this is not surprising to me, Paris's first naked restaurant closes after 15 months due to lack of customers. Au Naturel opened in November 2017 and was billed as Paris's first nudist restaurant. Mike and Stephanie Sada founded the eatery despite not having any experience about being nudists themselves. But just 15 months later, they've been forced to close after failing to attract customers. Harold, I have to admit, when I'm eating my soup, I don't want to see somebody else's junk.
That is the most ridiculous thing I have ever heard. That is unbelievable.
It's true. And there was a picture, too, of all these tables and people sitting. The picture was shot in a way that you couldn't see anything, thankfully. But you had all these people nude and they were eating. And if I'm eating my soup or burger, no, I don't want to see your nether region.
Exactly.
It's just that simple. And Harold, as we get into the weekend, good luck to your New England Patriots. Chargers, Patriots, Colts, KC, Cowboys, LA, Philly, and Dallas. The Green Bay Packers have a new coach, Matt LaFleur. We're excited about that, but good luck to your New England Patriots on the weekend.
Thank you very, very much. Got my fingers crossed. And all is well. Florida's beautiful at this time of year. I know it sounds a little wimpy coming from a Canadian, but it was chilly this morning at 50 degrees, but a beautiful day. And we have some clients down from Canada today, so we're excited to see them. And that's it. Another great show. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall. We will talk to you next week.